So derivatives are basically, uh, you can say futures are basically the derivatives of equity, that is, they are derived from equity, which means equity is the underlying asset. Underlying asset means, sometimes there is a thing whose value depends on the underlying asset. For example, in our day-to-day lives as well, we are having so many examples. For example, you know, the prices of petrol and diesel, they are dependent on the price of crude oil. That is, in case the price of crude oil increases, the price of petrol and diesel is going to increase as well. And just like that, the price of cheese and curd is dependent on milk. That is, in case the price of milk increases or decreases, the price of curd and cheese is going to increase or decrease. And in a similar way, futures are derivatives of equities only, which means they are derived from equity, which means the movement, the price action, the price change, everything is the same. Here you can see an example. This is SBIN equities chart, and here you can see this is SBIN future chart. So they are the same. The price movement is the same. The price action is the same. Everything is the same. And here you can see for SBIN, you can see this is yesterday's chart. You can see we were having a very clear entry towards the end of the market, that is around 212 or 210, you can say. So this was the entry. That is, here you can see the entry was at 212. You can see the price, which is 196.2. And first of all, it has made a high of 199.2, and here you can see the stop loss was hit at 197.8. And for futures, you can see the same entry. That is, here we can see the same entry at the same time at the same price. So this is what I mean when I say they are derived from equity only. Their value, their movement depends on equities only. But we are having three major differences here. The first difference is, in case you are trading in equities, you can decide your quantity. You can customize your quantity, which means the minimum quantity in which I can trade is a single stock, whereas I can keep on increasing my quantity according to the capital, according to the margin. Whereas this is not so in futures, this is not the same for futures. That is, in futures, we are having a predefined, a fixed lot size. For example, the lot size for SBIN, it is 3000 stocks. So the lot size is 3000 stocks. So I have to trade in 3000 stocks only. I can't customize it. I can only increase it according to the lot size, but I can't customize it. So this is the first difference in between them. The second difference is the expiry date. That is, derivatives are always having an expiry date. And for futures, it is going to be the last Thursday of the month. For other derivatives like options have weekly expiry as well, whereas futures are only having a single expiry, which is the last Thursday of the month. So on every last Thursday, they are going to expire, which means you can only trade in a current month future till the last Thursday for intraday. And for swing, to be on a safe side, you will be shifting on to the next month future from the last Tuesday itself. So here you can see futures are also of three types. The first type is the current month future. Current month, currently this is October, so October future is the current month future. Then we are having the next month future, which is the November future, and the far month future, which is the December future. These are the three types of futures. And if you observe here, I'll remove Nifty from here first of all. You can see, if you observe, SBIN current month future, which is the October future, is having a price value which is 200.8. Then you can see the price for November it is 201.4. For December it is 202.1. So it is increasing with time, which means futures are also made of two things. The first one is the price value, and second one is the time value. Price value means every stock will be having a price, so that is the price value. So SBIN's price value currently is 200.05 only, 200 only. So for October future, this 0.80 is the time value, the time which we are having till expiry. It is the value for that. And for November future, 1.45 is the time value. Then for December future, 2.1 is the time value. So that is the difference. And futures are the derivatives of equity, which means they are derived from equity, just like, in our day to day lives. Curd and cheese are derived from milk, and they are dependent on it. That is, in case the value of milk increases, the value of curd and cheese is also going to increase. You can see here that is for SBIN. You can see the SBIN's chart. You can see we were having a clear buying trade yesterday. You can see the time, it is 2:12. You can see the price 196.2. And here you can see for the future, we were having the same trade at the same time at approximately the same price. So this is what I mean when I say that they are derived from equities only. Only three differences they are having. The first difference is the quantity, that is, in case you are trading in equities, you can trade in a single stock as well. Whereas in futures, you will have to trade in lots, and every stock is going to have a different lot size. For example, SBI is having a lot size of 3,000 stocks. And the second difference I have told you, the expiry date. The third difference is the margins. That is, futures are highly leveraged. We are getting a better margin. That is, even if you are using you can say 20% or 25% of the total amount which is required for equity, you will be able to trade in futures. For example, here you can see we can select any stock. For example, I am selecting Axis Bank here. You can see the quantity, the lot size for Axis Bank is 1200 stocks, and you can see this will be the margin which you will be requiring. This is the capital which you will be requiring to trade in intraday. And this is the capital you will be requiring to trade for swing. And both of them, they are very, very less in case we compare this with equities. That is, for swing in equities, we will be requiring, I think, around 4 lakhs. And here for intraday also, for the same quantity in equity, you will be requiring more capital, whereas futures, they are giving you this leverage that, even by using a small capital, even by using a small fund, you can trade in futures. So this is the third difference. This is a kind of advantage as well as a risk. In case you know how to trade, you can book a lot of profit by using a small capital. In case you don't know how to trade, this can be a big loss as well. So here you can see, as the chart patterns, as the price action, the chart movements are the same. So for intraday as well as equity, so sorry, for swing in equities, the methods which we are using in equities, that is for intraday as well as for swing. If you remember, for intraday we are using the 1 minute chart. Then the setup, we are using the setup and the entries, so they remain the same for the futures as well. That is, the entries, the exits, the rules remains the same for intraday as well as swing. For the stock futures, only a single difference is there, which is the stock selection. That is, we are now trading in lots. This time we are trading in lots. So in case I'm trading in SBIN with 3000 quantity, this is a big quantity, so I have to be very careful. That is the reason we are changing the stock selection system. That is, you will be selecting the stocks on the basis of sectors, on the basis of sectoral movement. That is, here you can see, you will open the NSE's website, and we are choosing the stocks on the basis of sectoral movement. That is because, no matter how volatile the market is, no matter even if the market is flat, there are some of the stocks, there are some of the sectors which are always moving, which are always performing. So for that, we are choosing the stocks using the sectors. For that, here you can see, you will go to the live market. Here you can see we are having an option which says index. You will open this, and after opening the index, there is an option which says sectoral indices. First of all, you will be finding out the movement. That is, here you can see Bank Nifty was having movement yesterday, financial services were having movements, then private banks were having movement. So that is the reason I have chosen SBIN. That is not a private bank, but I chose banks. So, three sectors are having movement. So what you can do is, you can suppose I'm choosing private bank sector. So I'll simply click on it, and according to the market's sentiment, that is, in case the advances are more than the declines, you can choose the positive stocks. In case the declines are more than the advances, you can choose the negative stocks. In case you do not want to choose the stocks from here, I can simply provide you with a watch list. That is, you just need to analyze which sector is showing the movement right now, and you can simply choose the stocks from my watch list for that particular sector. And they are the best stocks, they are the best volume stocks. They will always give you movement whenever the market is moving. So you can simply select those stocks. So when you're selecting two or three stocks only for a particular day, you won't be missing on the movements. That is, supposingly I'm only watching SBIN and ICICI Bank and Axis Bank today. So I'm watching three banks only, three stocks only. So it is not possible to miss the entries. That is, in case you have already marked all the levels, you won't be missing on the entries. So that is the reason you will be following my watch list for futures. For equities, you can select any stock. That is, in case you are using the old method, you can keep on using it. In case you find this more comfortable, you can start using. This is more comfortable. This is giving better stocks. Better stock means better entries, better exits. Everything is going to be better. So this is the only change which we are going to make in stock futures. And the second part is the index futures. So you have been trading in stocks, but we have not been trading in the index. So this is something new which you need to understand. So for trading in index futures, there are a set of rules, very simple rules, which I'm going to tell you. So first of all, in case you are trading in indices, we are having two options. The first one is you can trade in the pre-open market. In case you are willing to trade in pre-open market, make sure the candles are safe. That is, the candles must be very safe. Only if the candles are safe, then only the trend is going to continue. Most of the times in the pre-open market, the trend is going to reverse, because the pre-open market reverses because of the global sentiments as well as the news. Like here you can see the first candle was oversized, so that was a sign of reversal only. So do not enter here. Only if the candles are safe, which is going to be very rare, then only trade in the pre-open or avoid pre-open. After that, the another rule is, in case you are willing to trade in indices, you are supposed to enter after 12:30 p.m. This is a rule because till 12:30 the market is going to consolidate only. It is not going to give you any movement. The indexes only gives you the movement once the Europe market opens. So once the Europe market opens, it opens at 12:30. The market starts to give you the move. That is the move or the movement may come at 1 o'clock, 1:30, 2 o'clock. That depends. But it is going to come after 12:30 only, or you can say after 1 o'clock only. So start finding out the entries after that, not before that. So for finding out the entry, we are having three simple conditions. That is, here you can first of all see the setup. I'm using the same indicators. So we are having three conditions for finding out the entry first. I'm telling you this. For finding out the entries, we are having three simple conditions. The first condition is there must be an entry using your strategy. That is, here you can see using the strategy we were having an entry. That is wherever all the previous highs were broken. So the first condition is fulfilled here. The second condition is MACD must be in the favor of your trade. That is, on the 5-minute chart, you will be analyzing MACD. And in case you don't know how to analyze MACD, I'm repeating that. That is, we are just confirming the strength of the trend. Not every trend is going to have strength. So to analyze it, if this particular trend is having strength or not, we are using MACD. And to use MACD, we are having two simple rules. The first rule is here you can see.
Your voice broke. Could you repeat that again?
Yeah, sure. I'm starting with the MACD once again. That is, we are using the MACD confirmation for checking the strength of the trend. So for MACD here, you can see this is MACD, the two lines which you can see. MACD means moving average convergence divergence. It is telling you the strength of the trend. That is, if a particular trend is having strength or not, that we are confirming using the MACD. So here you can see for MACD, we are having two levels. The first level is above zero. Second one is below zero. These are the two levels. In case you are finding out a buying entry, MACD must be moving above zero, then only that particular buying trade is correct. Then only that particular buying trend will be having strength. In case you are finding out a shorting trade, it must be moving below zero. In case there is a contradiction in this, that is a false signal. You are taking an incorrect entry. Like here you can see. Here you can see I got the entry at around, you can see 221. This is the time is 221. So I will be checking on the 5-minute time frame for the MACD for 221. So here you can see from 2.5 only it is moving above zero. So that means my entry is correct. The strength is there for this particular trend. And in case you are finding out a crossover here for the MACD, that is in case you are able to find when it is crossing above zero or crossing below zero, that is also a signal that within 15 minutes, within 20 minutes, you will be getting an entry in that particular direction. So when I've told you, you will be looking at the indices after 12:30. You can start analyzing MACD as well. In case you find out a crossover, that is MACD has moved above zero, that means within the next 15 minutes or the 20 minutes, you will be finding out a buying trade. In case it has moved below zero. So within the next 15 or 20 minutes, you will be finding out a selling trade. So you won't miss on the entries. This is your second condition which needs to be satisfied. Now the third condition, that is, for the third condition, there must be a price action signal which must be available along with your entry. Price action means the patterns which we had done in your first class, the technical analysis patterns, they are known as price action. So, in most of the cases, there will be a price action signal available on the 1 minute time frame itself. In case it is not available on the 1 minute time frame, you will be checking 3 minute as well as 5 minutes. Out of these three time frames, there must be a price action signal which will be available in case your entry is correct. And for this, you need to know price action very well. That is, do not force the patterns. Know in which direction this particular pattern gives you the breakout. If this is a buying pattern, a selling pattern, which pattern is there? You need to know that. Like here, you can see this was an ascending triangle, which was a confirmation that this particular buying trade in the buying direction is correct. So these are the three conditions for finding out the entries. So once you have found the entry, here you can see, once I have found the entry, my first stop loss remains the same. That is using the ATR trailing stops. The first stop loss remains the same. And the minimum profit is 30 points for Nifty. So once I have booked 30 points, I will be shifting to the 3 minute time frame in case I'm holding the index, the future for the indices. In case you want to trail, in case you want to book the maximum profit, the stop loss will be trailed using the 3 minute time frame, and the exit is also using the 3 minute time frame only. That is, for the proper exit, we are not using the 1 minute time frame, we are using 3 minute time frame. That is, wherever a full red candle will be formed below the red line, or for the selling trade, a full green candle is formed above the red line. That is your proper exit. Because on the 1 minute time frame, there can be exit a lot of times. The stock or the index may give you an exit so many times. So for that reason, we are using the 3 minute time frame for your exits. So these are the rules for trading in indices. This is for Nifty. You can repeat the same rules for Bank Nifty as well, but Bank Nifty is very volatile on most of the days. So try trading in Nifty. Whenever you find a clear move in Bank Nifty, then only go for Bank Nifty. Here you can see. So we will be finding out the three conditions once again. Sometimes, Nifty and Bank Nifty, they are replicating the movements as well. Like in the case of yesterday, you can see these are same movements only. So here you can see the entry was there, the price action was there. Then obviously MACD will be moving above zero only. You can see the strength of the trend. And you can take the exit using the 3 minute time frame in case you are taking the proper exit. Safe profit here is 45 points only. So once you have booked 45 points, you can exit as well. So these are the rules which you will be following for the indices. And index trading is very beneficial if done correctly. That is because of the margins. Here you can see. You can see, And in for indices, I do not suggest swing for futures. For futures, you won't be trading in swing. That is, for futures, you will be only trading in intraday. Swing is very risky if done in futures. Swing is never done in futures for indices, I'm saying, not for stocks. So for indexes, we do not do swing in futures. That is going to be very risky because of the news. It can be, done in options for hedging, but not in futures. So here you can see the margin. I think there is some glitch here. Okay, it's not showing you the margin. For intraday, the margin for Nifty will be around 16,000 or 17,000 only. And for Bank Nifty, it is around 11,000 only. So, by using that much margin only, by using that much capital only, even if you are booking 30 points daily, that is a great return if done consistently. That is, first of all, you need to paper trade. That is for indices as well as stocks. Paper trade, first of all. Check where you are going wrong. See your mistakes on a paper instead of making losses every day. You can check out your mistakes. You can improve your mistakes on paper first. For futures, you will be making a journal. Journal means I will be sending you samples for that. People have created a very nice journal for the futures. That is, they have written the name of the script, they have attached the chart along with the entry, and they have explained the reason of entry, the reason of exit, everything. So I can send you some of them. You can analyze. They will be having the dates as well as the time. So you will be making yours as well. That is, you will be writing all your mistakes so that we are not repeating them. Indices are very volatile, so you will be making the mistakes in the beginning. So we will be improving all the mistakes so that we are not repeating them. For that, you need to write all your mistakes, all the mistakes which you are making while paper trading. And without paper trading, in case you are trading in indices, or in case you're not good with price action, in case you're not good with the entries or anything, in case you have not understood anything, that is, index trading won't be successful. So this needs a lot of practice, which we will be doing on paper first. So this is how you will be trading for the stock futures as well as index futures. Stock future is very easy. You have been doing already. You are doing the same thing already. So you just need to convert them in futures. That is, on paper you can simply convert your trades which you are doing in equity into futures. And index trading is something new which you need to get a hold on, and that is also very easy if you follow all the rules. Any doubts still here? Any doubts here?
If we get a entry when the MACD in 5 minute time frame also in the same direction, can we take it or should we wait for the crossover?
Crossover is a must for finding out the entry. That is the reason I told you your strategy entry must be there. In case you are entering only on the basis of resistance breakout or support breakout, that is always going to reverse and hit your stop loss. So we are only focusing on a single entry per day. A single quality trade is enough. So which you will be getting after 12:30 every day. So instead of booking 10 points just by resistance breakout or support breakout, it is better to follow all the rules and then enter. In case you are not using the indicators, then it is not necessary. What some people do is they are using for indices, I'm saying. So, but in that, the stop loss is a lot. That is when you are using the price action only. For example, suppose, some people are
Your
too
voice
good
is gone again.
some people are too good with the price action. That is, they have practiced the price action so well. That is, here you can see, like, in case I'm finding out the bullish flags. So what they do is on the low of this particular candle, they will be setting the stop loss and they will be booking the profit. Like that they are doing, but that is, not that accurate. Like here I can see a descending triangle. So in case you are trading like this, you do not need the cross over here. That is, this is how most of the people do in indices. That is because they are good with patterns, too good with patterns. So this is another way which you can use, but this is not that accurate because not always, you will be able to predict the trend. So in case you are using all the conditions, that is a confirmation, even if you are when you are getting the entry using your strategy, using price action, using MACD, that is a triple confirmation. So that is the best way to trade in index. And for that you can pay for practice. I can correct all of your practice. Any other doubt?
Uh, I don't know means how to check this or to apply that MSCD.
How to
Okay,
apply?
MSCD that okay that
Apply
below
or
chart
use, you want me to explain the
use
concept? The concepts?
yes
Okay, I can
concept and
repeat that.
okay
See,
concept and okay also don't know means how to apply also how to see
apply
here.
is easy, so from the indicators only we have applied. So I can show you that as well. So here you can see, this is SBIN's chart. You can see this is SBIN.
Yeah.
So from the indicators, we apply the MACD indicator. That is, here you can see. You will simply search for the MACD indicator and you will apply it with the default settings, which means I have
Okay.
only applied it with the default settings. So for using the MACD, first of all, entries are always found on the 1 minute chart as you are finding till now. We are just using this indicator for the confirmation in case our entry is correct or not, in case that is a false signal or not. There can be a lot of false signals as well. So for that, we are using the MACD. That is, you will be analyzing the MACD on the 5 minute time frame. That is, in case you are getting a buying entry on the 1 minute time frame, MACD will be moving above zero only in case that entry is correct. So for SBIN, if you remember, it was a buying entry. So it is moving above zero only at that time, at the time of entry. In case it is a selling entry, it will be moving below zero only. So that confirms your entry. That is, it is not a false signal. For MACD, I'm having a detailed class. I will be sending you that. In that, I have shown you for, I think, 5 or 6 entries in detail, so you can have a watch on that. So we are just confirming the entries using this, that is, to avoid the false signals.
Okay.
Any other doubt, anyone?
Okay. So this MSCD uh, we can see only in 5 minute charts
Only
and
on 5 minute, and 5 minute is only for the MACD indicator, nothing else.
okay.
Any other doubt?
Could you just repeat that, the buying and selling strategy again with the MACD? I think I didn't catch it properly.
For
So,
the index,
yep. So this is applicable only for your future trading, right? For the normal equity, we don't need to use the MACD, right? Like
We need to, sir. For the normal stock equity, if you are using that, you won't be getting the false signals.
okay, okay.
So here you can see I'm telling you for Nifty once again. And in case you are disconnected, you need to reconnect once again. So here you can see this is Nifty future. So for trading in Nifty or Bank Nifty for any index, I told you three conditions for your entry. The first condition is your strategy. So if we are trading after 12:30, which strategy we are using? Mean average. So using your mean average strategy, there must be an entry. Here you can see mean average strategy means all the previous highs of the previous consolidation are broken, or all the previous lows of your previous consolidation are broken. So there must be an entry. Second thing is MACD rule must be satisfied. In case we are buying, MACD must be moving above zero on the 5-minute time frame. In case you are selling, it will be moving below zero on the 5-minute time frame. If this is not satisfied, do not enter. The third condition is we need to find a price action pattern there. In case there is no price action signal, do not enter. These are the three conditions for your entries for buying as well as for selling also. In case there is a selling trade, there will be a selling price action signal which is going to be available there. For example, here you can see. You can see here, as I told you, after 12:30 we will be getting an entry. So you can see a selling price action signal, which is the descending triangle, was also available here. Your strategy was also satisfied. Obviously, the MACD is also moving below zero only on the 5-minute time frame here. So this is how you will be finding out the buying and selling trades. And for the price action signal, if price action signal is not available on 1 minute, you can check it on 3-minute or on 5-minute. In case it is not available on any of them, there is no entry. Like here on the 3-minute also ascending triangle was being formed. Also it looks like a double bottom as well. So double confirmation this is. And for the exits, I have told you for the proper exits, you can use the 3-minute chart. That is, the exit remains the same. The same exit, the same proper exit which we were finding on the 1-minute chart, you will be finding on the 3-minute chart instead of the 1-minute chart, because indices are volatile. On the 1-minute chart, there can be early exits. So for that, we are using the 3-minute chart. So you basically need to revise this class and then start with paper practice. I think then only it is going to be clear.
Okay, and the MACD convergence that you're talking about, the below graph, that the one, the graph which is having that 12, 6, and 9
Yeah.
variables. So does it mean that if the graph is like if it goes below zero, that's when it's a sell? Does it work like that? And
Yeah,
when
in
it is
case
in
you're
the above?
having the selling entry on the 1-minute chart, that is a confirmation. So
Okay.
you basically need to attend the MACD class, or I will be sending you that. Please go through that once. I think that is missed by you.
Yeah, I think I missed that. Yeah, I think.
So I'll send you 2 sessions for that.
Sure.
You can go through that. Then only I think this is